All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our options midweek update. I wanted to jump on, talk you through what we're seeing big picture here across many different markets. Also want to take a look at some potential new trades that are setting up for us over the next few days. So let's go ahead and dive in. Let's start out like we usually do with a daily chart of SPY. This is not a chart that I use for entry and exit points. It is a chart that I use to gauge overall market sentiment. Are we seeing bullish, bearish, or more of a neutral type trading environment? That helps me gauge how aggressive I want to be with my option strategies. Am I interested in long calls, long puts, or vertical spreads? Am I interested in weekly options or monthly options? This chart here will help me get a pulse on the overall market. So let's go ahead and take a look here. If we go back to our previous few videos last week, we talked about how SPY was finding support right on top of these blue lines. Those are the 89 simple and exponential moving averages. And we held those levels for 4 or 5 days in a row. We tried to probe below them. Markets found support right there, and we rallied back up to end the week last week. And then here this week, it's been another move to the upside. What's interesting is that we have now hit the upper end of the channel. We talked last week about how if we do rally up, it was going to be more difficult to break some of these moving averages on the upside, specifically the 50 period and the 20 period moving averages. Those are the green and the yellow lines here. Notice where we found resistance today. We tried to break up above those levels. You can see that wick here up at the high of the session. We tried to break those levels. We couldn't do so into the close, and that's the crucial piece here. When I track support and resistance levels, it's not enough just to break those levels intraday. I want to see a close above or below those levels. So in this case, we clearly know where the area of resistance is at. Now, those of you that watch the market today, you could push back a little bit and say, yeah, those are good technical levels to look at, but today was all news driven. And it certainly was. We did see the day start out with a pretty massive rally after the open on rumors of another stimulus deal being close to finalized. We followed that up this afternoon around 2 p.m. Eastern. We had headlines hit that we actually aren't close to a new stimulus deal, and the market sold off of the high. So it was a very news-driven day today. But bottom line is, from a technical perspective, we are at a key area of resistance. If we're going to see another leg to the upside going into the end of the week, we need to break this level right around 335. I want to see that level broken on a closing basis. We can't control the news. I can't control the headlines. Neither can you, but we can control how we interpret the price action, right? So my outlook here for the next couple of days, I think we are going to continue to see more of a news-driven environment, unfortunately. It's always nice to be into a market like we've seen the last few weeks where, it's more technical driven. It's more focused on price instead of just news. We're back into a news cycle again here this week. Hopefully we see that settle down again here going into the next few days. We do have a lot of news out over the next few days, specifically the employment report coming out on Friday. That is a huge report, huge number, pre-market, that could definitely give us the catalyst to either break this area of resistance on the upside or get us back down and test those support levels down below us. So we'll see what happens there. The volume was pretty darn good today, 101 million shares on SPY. But what's interesting is most of that volume came after 2 p.m. If we go back to when the market was in this slow rally higher most of the day, this morning the volume was very light. There was not a lot of conviction on the upside. When we saw that reversal around 2 p.m. and markets started to sell off, the volume definitely picked up. So that's just something to note. Definitely could look back on that here a couple days from now and say, hey, we did see volume come back in Wednesday afternoon, and that was the tell. That was the tell that we were in for more volatility. So definitely favoring more back and forth movement here. I'd be very, very surprised if we just saw another rocket ship to the upside. I just think there's too many unknowns here with the election and COVID and just too much uncertainty here, in my opinion, for that one-way move to the upside. I do think we'll see a very active market, but with more back and forth movement to work with. Let's take a look at the internals here today. We had pretty impressive internals earlier in the day. The first half of the day, it was pretty across the board as far as strength goes. We had volume ratios on the NYSE 5-to-1 positive earlier in the session. We closed at 1.8 to 1 positive. Still positive. We still had more volume on the upside than the downside, but we were well off of the highs of the session. And the NASDAQ 1.79 to 1 positive. Again, still positive, still more volume on the upside. But we came well off the highs from earlier in the session. The advanced decline line, this is what's an interesting number to me going into the close. We saw a close right around 133. This number was up over a plus 1,000 earlier in the day, indicating across the board buying in many areas. Seeing that come down all afternoon just shows that there is some fear into this market. Okay, we had fear come back in this afternoon. The strength today was really in those key tech names, right? Apple, Amazon, Facebook for a good part of the day. We did see Google reverse, but we didn't necessarily see that strength across the board continue into the close. We definitely saw some signs of some worrisome price action kick in this afternoon on the NASDAQ, but also on the NYSE as well. If I go over and take a look at the NYSE, you'll see there only at plus 279 into the close. We typically want to see those numbers on a trending day to the upside. I want to see those at least at plus 1,000, plus 1,500 would be even better. We were nowhere near that going into the close this afternoon. We also, down in the lower left-hand corner, we saw 5 minus 1,000 tick readings in a row. Minus 1,000 tick readings indicate sell programs kicking in. And we had 5 sell programs after 2 p.m. kick in back to back to back. So that indicates, again, more fear kicking in this afternoon. And you can see the wild ride on the 5-minute chart. I mean, we were all over the map, especially after 2 p.m. So I think you're going to continue to see very active markets. The reason I point this all out, I definitely think we're going to want to keep the position sizes small. Take a larger number of small positions, knowing that we're going to see volatility. We're going to see bigger moves back and forth. We don't want to load the boat with 1 or 2 big positions, because if those are the wrong positions, if we lose in those positions, you're in trouble. There's plenty of activity here in so many areas. I'd rather spread that risk out into many different areas. Take a larger number of small positions with different types of options strategies. You're going to be much better off taking that approach. One way that we were able to diversify, let's talk through one of the trades that we closed out here today. This was on SPY. This is what we call our overnight pop trade. Some of you have heard us talk about this trade setup here the last couple of weeks. It's an overnight trade that we're looking to put on going into an options expiration. SPY is one of the few products that has multiple expiration cycles throughout the week. We have options that expire every Monday, Wednesday, and Friday. Because of that, it gives us an opportunity to take those overnight positions, taking advantage of the potential movement going into expiration. We prefer to take these setups with credit spreads because we know going into expiration, those options are very active. The time decay is extreme. They're very exposed to volatility movement. We're looking to use credit spreads, selling those spreads into expiration with the hope of buying those spreads back the following morning for a cheaper price and booking the profit. And what we did yesterday afternoon, we came in and we sold an iron Condor on SPY. We've been doing this quite a bit lately. And all an iron Condor is selling an out-of-the-money call spread and an out-of-the-money put spread at the same time. What we did is we utilized the September 30 options. So again, the cycle expiring today. We came in yesterday afternoon and we sold the 337, 339 call spread and the 330, 328 put spread at the same time. All we're doing is trying to sell an out-of-the-money call spread and an out-of-the-money put spread, trying to box the price in. We're trying to create a profit window that we expect price action to stay inside of. That profit window is defined by the strike prices of the options that we're selling. In other words, I want price to stay between 337 and 330. This is a neutral trade. I was not expecting a big move on SPY. I also was not expecting all of the headlines to hit this morning with the stimulus plan. As a result, we were dead wrong on the directional move for a good part of today. I was not expecting a $6 move higher on SPY during the first couple of hours of the session. So we were dead wrong on direction. However, we were still able, here early this afternoon, we were still able to close this position out. I closed it out for 49 cents. We got filled yesterday at 70 cents. We collected $70 per spread, and we were risking around $130 per spread to put the trade on. So a very realistic trade for any account size. We weren't tying up a ton of capital. You could have taken it with a bigger position size if you do have the bigger account size, but we were able to close this trade out. I booked about a $20 profit per spread. Wasn't a huge profit. The reason why I closed this trade out midday, we were dead wrong. And at one point this morning, we were underwater on that trade. When you get into expiration day, it's very, very difficult if you're wrong initially because everything is so extreme. The time decay is extreme. The directional movement or the gamma risk is extreme. And we got on the wrong side of the directional move today, and we were underwater. We decided to hold until we booked a profit, until we were into a profitable position. And I had some people ask, why not just hold into the close? Had I held into the close, this whole thing expired worthless this afternoon, and we could have kept the entire profit. What you have to fight as a trader is hindsight, right? Hindsight's always 20/20. I can always look back after the fact and say, I should have done this or I should have done that. In the heat of the battle, we went from a losing position to a winner. Okay, the markets were zooming to the upside midday, so I absolutely closed out of the trade, booked a partial profit. I know some of you held into expiration, that's fine. Congrats to those of you that did. You had the bigger profit, better than me. But just be cautious with that long term. Expiration day can be stressful. Things happen very, very quickly. So I typically like to close out of these positions, book the partial profit. That way I don't have to hold into expiration. So these overnight pop trades continue to do really, really well for us. We've had a really nice winning streak. Just another way to add in some additional profit. They're not going to be huge winners, but it is a way to diversify, get some other types of trades going in our account. So that was the SPY trade. And we'll pick it back up. We'll take another look at SPY Thursday afternoon into Friday. See if we can get another overnight pop trade on the board. So let's talk through some of the markets. Let's go over to our actual charts that we use to trade off of. These are the charts that we use for entry and exit points. And let's start out with SPY. I like to trade off of the 195-minute chart. It gives you 2 candles a day instead of 1. We have our trend strength indicator down at the bottom. It did flip from red to blue here. That happened Monday. Late last week, we started to see some buying that continued into Monday. We did get a flip into bullish mode on our trend strength. We did get price action above our moving averages up top. Those are the 8 EMA and the 50-period EMA. Saw price action close above that level, and it did put us into a bullish position. If I get my data box up here, you will see that our entry point was at 335.57. The blue plus signs right there. This setup is valid. We are in a bullish trade. Here's my words of wisdom for these setups that we're talking about today. I don't have a problem being bullish here. You just want to be cautious with position size. This is not a market that you want to load the boat. You don't want to put on big positions because anything can happen. And we saw it today. All it takes is one headline and you have chaos in minutes, right? So keep the risk small. We could certainly see this market rally back up. In fact, I would not be surprised if over the next 24 to 48 hours, we get another headline that, hey, we're close to a stimulus deal again. That's just the market that we're in right now. So don't have a problem being bullish. Just be more conservative. Smaller position size if possible. Potentially using more vertical spreads just to reduce your exposure. Let's talk briefly about what expiration cycles I am using here. The last few weeks, I've been using a lot of the October monthly options with 16 days left to expiration. The only reason why you'd want to continue to use those options with only 16 days left is if you have a high confidence level that this market's going to stay active and that you're going to have a very short holding time. Because from here on out, the time decay really picks up every single day. You want to be cautious of that. If you're anticipating, only being into a trade for 2 to 3 days, that's fine. You can get away with using the Octobers. I am starting to move farther out in time. I want to limit the time decay because this market has been so active with a lot of false breakouts in both directions. I'm trying to be a little bit more conservative, and I typically like to trade options that have between 20 and 60 days left to expiration. I've been looking at the November monthlies here because they have 51 days left. A little bit farther out than I normally go, but if I go 51 days out, I am able to limit the time decay somewhat. The monthly options are typically going to have much better liquidity than the weeklies. If you take a look at the volume and open interest, I mean, we're in the thousands here of open interest on each strike price. It's going to be easier to get fills on the monthlies. I'm not saying you can't trade the weeklies. We do have weekly cycles in here with between 20 and 60 days left to expiration. I'm fine with any of those. Just make sure you're watching liquidity. It's not going to be an issue on SPY, but there certainly are stocks out there that just don't have near the liquidity in the weeklies. If that's the case, then you're going to find it much easier to get in and out of trades quickly using the monthly options. All right. So SPY, you can potentially look at a long call spread. I'm fine with either one of those approaches. And you can even sell a put spread in here. Use a credit spread to lean a little bit bullish with a more conservative type trade. All right. So that is my outlook on SPY. Cautiously bullish here in the near term. And we know that the employment number has been very bullish for this market the last few months. I mean, it's rallied up pretty big. Even if you go back to when COVID really picked up back in March and April, I mean, the employment number has led to some pretty big moves to the upside since then. You have to expect more of the same here towards the end of the week, and we'll see what happens on Friday. QQQ, the NASDAQ ETF. You can see here, I mean, the NASDAQ continues to be a market bellwether, right? I mean, it's been a huge part of this overall market for most of this year. QQQ is also in a bullish setup here. We did get the trend strength indicator to flip from red to blue. We had price action get up above our moving averages, and we did confirm here on Monday. So this trade is in progress. Small profit, nothing huge at this point. We did have some decent profit this morning on the move higher, but with the market reversing midday, we did come back down towards that entry point. So cautiously bullish. Everything I mentioned on SPY holds true on QQQ as well. Leaning a little bit bullish, but I'm doing so in a more conservative way. I'm trading a lot of vertical spreads right now, trading a lot of monthly options, and we'll see how it goes. See what the market gives us here over the next few days. Apple. Big part of the index products. Makes sense if SPY and QQQ are in long trades. No surprise here that Apple is also in bullish mode. The trend strength indicator flipped from red to blue here as well. This actually happened towards the tail end of last week. This trade did trigger in. It's in a small profit here at the moment. If you're in a long call position or long call spread, it's going to be a small profit. Nothing earth shattering yet. But we have seen some pretty good strength here on Apple. And keep in mind, as we go into October, earnings season towards the second half of the month is really going to pick up, especially on the tech names. You want to keep that in mind. The reason I point that out, we've got a little bit of a window here over the next few weeks where we could certainly see some decent movement. But as you start to get closer to earnings, that's when you typically start to see more choppiness kick in. And we'll talk about that more in the videos to come over the next few weeks. I'm still trading Apple like I normally would, but it's something I want to point out, something we'll want to be aware of with earnings out towards the end of October. Let's take a look at the financials, Citigroup and Jpmorgan. I mentioned in the videos last week, if we get the financials and energy to pick up a little bit, they have been the laggards here lately. If we start to see some strength in those sectors, that could certainly be a catalyst for another wave to the upside. And for a brief moment this morning, we saw that. The financials were actually pretty strong for most of the day. We haven't been able to say that much lately. We don't have a long setup here yet on Citigroup because the trend strength indicator is still red. We're still in bearish mode. However, the pulse indicator, that middle histogram, notice how it's plotting yellow. That's indicating that price is between a 1 and a 2 standard deviation channel move on the downside. We talked about this one last week. When you start to get these yellow pulse bars, it indicates that price is at an extreme. We're oversold. It does not mean that Citigroup can't head to the downside further. It just means out of this pattern, we typically see a sideways consolidation or a reversal in the other direction. Lo and behold, what has happened since those yellow bars started printing? We have seen price action chop sideways. We're starting to see it bounce up a little bit. Very common pattern out of a pulse indicator reading like this. What I do to take advantage of these readings, if I see 3 out of the past 5 bars plot yellow, it has me interested in putting on a credit spread. In this case, selling a put spread. Selling a put spread is a bullish position. It just gives us a neutral kicker. If I don't get a big move higher, if we just chop sideways, I can still make money from selling a put spread. And that's exactly what we did here last week. We haven't seen a big move higher here. Again, I don't need it. We talked about that last week. If we do get a move to the upside, we're going to make money faster. We'll hit our profit target faster. If we don't get that move higher, if we just kind of chop sideways in here, we can still make money, but we have to be more patient and let that time decay build in our favor. Jpmorgan, symbol Jpm. Similar looking chart pattern to Citigroup. Citigroup has been the weakest one out of the financials that I look at. Jpmorgan is actually working on a long setup. Our trend strength indicator just flipped from red to blue. Price action did close above my 8 EMA. That's that red and blue line here at the top. The entry point is currently sitting at 97.40. My concern there with the entry point is that it's right on top of the 50 period EMA. That's that white line there at the top of the chart. I'm going to adjust my entry point up. I want to make sure that it breaks above the 50 EMA before I jump into a long trade. So it's definitely on my radar for the next couple of days. I'd definitely be interested in buying some long calls there. Do you want to keep in mind that we have earnings upcoming? And Jpmorgan has earnings out on October 13th. We still have a couple of weeks here yet, but it's something we'll want to keep an eye on. I personally do not like to hold long call or long put positions into earnings. The only trades that I'd be willing to hold through an earnings release would be a credit spread. Right, so we'll keep an eye on the financials. XLE, let's talk about energy. It's been another area. I mean, tech has been pretty active. Tech has been super strong. Energy and the financials have been really, really weak. And we saw another session today where XLE just can't get out of its own way. We have seen this move to the downside has been pretty nasty. I mean, there's been very few attempts at a bounce here on XLE. I'm looking for a potential bounce here. There's no setups here yet. We're not in a long position yet. I do need the trend strength indicator to cross above the 0 line. So I'm not presenting this as a trade opportunity. It's just an area that I want to keep an eye on, because if energy does come to life a little bit, it could potentially give the market a catalyst to bounce back up through those resistance levels that we talked about here earlier. Etsy. Let's go ahead and take a look at Etsy as well. We currently have a long setup in play. We've got a profit on this, nothing huge. Last time I checked here today, it was about a 25 to 30% winner for us. Still in bullish mode. The trend strength indicator is still firmly above the 0 line. We have price action above the 50 and the 8 EMA, but notice the low of the session today did test that 8 period exponential moving average. I'm watching that closely. If that level breaks, that would be a warning signal here to potentially close out of the long trade. So right now I'm in the long call position, still holding for now. We'll just wait and see what happens here over the next couple of days. I would like to see one more push to the upside. And because I know the employment report's out on Friday, and we know that it has been a bullish report, I'm trying to hold on just to see if we get another wave higher. If we get a big move lower tomorrow before the report is out, certainly that would change my approach. But for the moment, I'm trying to give these trades a little bit of room here to potentially move back higher. And then finally on IBB, this is the biotech ETF. We did put on a long call position here yesterday. We're up a couple of bucks at one point this morning. IBB reversed off of the highs along with the rest of the market here midday. Still have a small profit on the trade, still looking for a push to the upside. I want to have some exposure to either healthcare, biotech. The reason I want that exposure is at any point in time, we know the potential is there for a vaccine headline to hit. And I want to have some exposure there. I'm not saying we have to have a huge position on, but knowing that all it takes is one headline to state that they're close to a vaccine, the trials are going well, and these names can explode. So I want to have some exposure there with either healthcare or IBB. All right, so those are some of the names that I'm looking at here going into the end of the week. If you have any questions on those charts, feel free to post a comment here on the video or in the blog, or send me an email directly. Mike@netpicks.com is the email address. So we will be doing another live update, a live session here on Friday at 12 o'clock Eastern. So we'd love to have you join us here in YouTube or on Facebook. We'd love to have you. If you have any questions between now and then, feel free to reach out. We'd love to connect. Otherwise, enjoy your evening, everybody. Enjoy the next couple of days, and we'll pick it back up here on Friday as we wrap up the week.